Very good afternoon, everyone. Charles here, FRGNT Daily Chart Analysis. Thursday, the 9th of July, 2026. The time is approaching 10 to 2, local time here in Milan. Where to start, really? It's been a bit of a tricky time of the year. It's summer. We all want to be out. I've been on vacation a couple of times. It's taken my attention slightly off of, not off of trading, but certainly off of posting my charts every morning. As you can imagine, that is what we're trading for, a bit of freedom in our lives, being able to work remotely. So I've been taking full advantage of that opportunity, and of course, as a result of that, I haven't been able to post as much as I would like to have done, but nevertheless, I've still been active in the charts. I have tried to put some charts out there as and when I have had a moment spare in the morning, where it is at least useful for you guys that are viewing the charts. And as I've gone through the day, I figured, well, what's the point, as the majority of people are not really going to be trading in the latter stages of New York, or certainly myself, being quite honest. So if I haven't been able to do it in the morning or even towards the afternoon, then I've just been at the charts myself and just seeing what's been going on. Nevertheless, I hope everyone's doing fine, still managing their risk appropriately and taking full advantage of what I'd say a very easy couple of weeks. What I mean by easy is the fact that the direction of the DXY, you'll notice that I'm always starting my analysis based on the DXY. It's going to sound very boring to those of you that view my videos and charts occasionally or more so, more often than not. The DXY is the catalyst. My main pairs, GU, EU, AU. US dollar CAD is creeping in there. You can see UJ on the right hand side, GJ and GCAD as well. But predominantly, I am trading that US dollar cross pair, and GU, EU, and AU are my favorite pairs that I like to trade. And when those pairs are trading in line with using the catalyst by way of the DXY in a way that is very foreseeable to anticipate the strategy, I very rarely move over to UJ, GJ, GCAD, and even US dollar CAD to a certain extent. So the DXY of late, of course, if you have gone over my analysis of late, this is going to seem incredibly boring to you. You would have heard it already, but you can just see even the top right hand chart on the weekly time frame, it's very clearly trending to the upside, illustrated by the green illustration, just by way of higher highs and higher lows, and really just anticipating what price is doing on that weekly time frame. So of course, once we've had that higher high, you'll see over here of late breaking those most recent structural highs to the left. That is the higher high confirmed, and it's just up to us to understand, well, after a higher high is confirmed, we are anticipating that higher low before that higher high continuation. So therefore, once the higher high is confirmed on the DXY, then we go down for the lower time frames to understand, can we see a turnaround in price action, or do we have a valid point of interest that we could potentially anticipate a short position from, as you can see by way of a daily order block of which we have here, by way of the fact we've got that bearish engulfing candle giving us that daily order block, in fact making our life very easy, because that is the only order block available. And then once we've seen price move away from that area, going down into the 4 and 15 minute time frames, or 4 hour rather, in the 15 minute time frame, see if we can then locate those breaks of structure. And as I always start to say, one line will do it. If I grab my illustration here and just put one red line across, you can quite clearly see that we were making highs from these areas. We failed to make a higher high, of which we'd anticipate higher high, potential higher low area for a potential higher high. We failed to have that. And of course, we didn't have anything here, so we're kind of in no man's land at the moment. However, once you get this break of structure, pull back into a valid point of interest, and even the fact that it hasn't quite yet tapped the higher time frame 4 hour order block, we are very much so trending out of, if you take your attention to the bottom right hand chart now, trending out of that daily time frame order block. So price doesn't necessarily have to respect my illustrations, but I have to understand, or we have to understand, what is price action doing. So of course, on the higher time frames and longer term perspective on that DXY, I am anticipating DXY strength coming out of the market, higher time frame. However, in terms of an intraday perspective, the way that I am using that is understand that, well, the higher high has been created, so potentially I can use the information by way of understanding once that higher low is in process of being created, that's going to give off the signals for a weakened US dollar, a weakened DXY, and then potentially I can gain the benefits, let's say, for a GUE or an AU long, of which we executed a couple of days ago. We'll go through that in a moment, or more so today, that I'm looking at the opposite by way of the fact that price is coming into potential areas. We can see here potential session low. So using that information, the fact that maybe price isn't really trending as well as I'd like to see it on the 15-minute time frame, but just having a look to see what's going on. So we can see that price was very beautifully trending to the lows, lower low, lower high potentially, lower low was failed to be created. So of course this is now the break of structure to the highs. There's the high, higher low, potential higher high, coming back down to this session low area for a potential higher high. And then the question is, well, where could that higher high be taking me into? And then it falls back right to the fact that, well, I do have an illustration already on there by way of refined daily order block, by way of 4-hour order block refined at the highs of that daily order block. So potentially I do have reason to anticipate why the DXY could want to push slightly higher before then taking advantage of the fact that we can then look for that higher low to be created. So it's very, very, very technical in terms of the analysis, but it's nothing that anyone cannot achieve. Once you understand the way price action is moving, once you focus on your strategy and then just hone in on that ability. And as I always say, you've got a couple of elements to a very, very good trader. You've got your technical analysis. That's one element of a great trader. And then you have your trader elements, i.e., do you understand when is the correct time to be executing a trade? We can all be great technical analysis based on pretty colors, pretty illustrations, order box and Gann boxes, illustrations like how I draw here, higher highs and higher lows. And yes, we can anticipate where we believe price to go. But as I always say, just because price is in a valid point of interest, it doesn't necessarily mean that it is going to be me that is going to be providing liquidity at that time to actually take price where I believe it could well go based on the technicals. That's your trader elements coming into the picture, and then it's down to you to understand when is the correct time to execute a position based on the fact, right, I've got a point of interest on the DXY, but do I have breaks of structure to actually give me the information that the DXY is now, let's say in this instance, ready to push back up towards those highs? Once you've got that, that's your trader elements being paired very nicely towards your technical ability. And just to go back to the technical ability, anyone can have the technical ability. Most traders, in inverted commas, are great technical analysts. However, most traders, again, in inverted commas, those in particular that are not profitable, fail by tripping up on their technical abilities, i.e., when is the correct time to execute, awaiting their strategy correctly, not just executing based on the fact that price is in a valid point of interest and that's their technical analysis. It now has a great big tick to it. That's not the job. Our job is technical analysis plus all those additional trader elements, and that, you'll have to take my word, will bring you beautifully towards long-term profitability in the game that is trading. So enough of all the spiel. You all know me from time to time. I like to have a good rabbit on when I have the opportunity to do so. So I'll take that opportunity now. So nevertheless, as you can see, I'm using the DXY to the full potential, and you can paint a complete picture of your trading, in my opinion, based on the fact that I trade the US dollar cross pairs, just using the DXY. Understanding when the DXY is ready to turn around based on your points of interest, it makes trading those cross pairs so very much easier in doing it. For example, am I ready to execute a position on a cross pair? Well, the answer is, well, is the DXY ready to turn around? If it's not, and your crosspair absolutely flies, well, I'm sorry, you just simply have to say, well, the DXY didn't give me the information that it was now ready. However, when I'm seeing price come in to, if I bring your attention to the top left-hand chart, that's a 15-minute time frame. When I'm seeing price coming into these session lows, it's not just a session low, it's a session low that caused what? A most recent high in the market. Therefore, for me, once price returns back down to this area, and as you see it just here this morning, that's where I should be looking at my cross pairs and understanding, well, do I have a potential short position that I could potentially execute based on the fact that the DXY is now in a valid point of interest? And then when I go down to a lower time frame, let's say on the DXY, to gain that confirmation, usually by way of 1 minute and 5 minute, I'm looking for those breaks or structures or engulfing candles on those lower time frames. I'm quite happy to put in my journal that based on the DXY, I have a confluence and a valid reason to take a crosspair position on the basis that my crosspair also looks good based on technicals, also looks good based on structures, breaks or structures, and it looks good as a standalone pair. I have all the criteria and basis to take a position. Anyway, that's me going on for 10 minutes already. So let's take you to the positions that we've had over the last couple of days. So yesterday we took, was that yesterday? Yeah, Wednesday the 8th of July. We took an Asia range short position. Pretty much textbook, to be quite fair. The first criteria based on Asia range is, can I understand that price has broken structure from a valid point of interest based on the 15-minute time frame? So what we can see to the left is, of course, price is, of course, trending towards the upside. At some point, one line will do it. I must understand that price has been broken to the downside. So, of course, now, here being the key structure point, that initially would have been my target. And, of course, it was my target based on the Asia range criteria. But we let price go slightly longer. Nevertheless, what I'm seeing in the market is, of course, then based on the DXY, why is this a position or a point of interest in the market for me to potentially look for a short position from? So what I have seen is that price was making those lows, lower highs, lower lows, lower highs, lower lows, and we're trending. So therefore, I'm taking the opportunity to understand, well, do I have a valid point of interest in this area by way of 15-minute order block? Of course I do. And then when price comes there, have a look at the candles that were presented from that area. And you need to understand, well, based on those candles, does that give you any information whether the next move in the market is looking to go bullish or bearish? We're seeing wicks being thrown to the highs on the lower time frame, particularly the 1 minute time frames. We're seeing very evident breaks of structure. In fact, not evident, we're seeing very subtle breaks of structure that only become evident when you know what you're looking for. I won't be unfair and say it's clear and obvious, but if you put that one line there again, as I always say, one line will do it. You can see the difference. Here, this is the 15-minute time frame. Therefore, this wick to the low is, of course, 1 minute candles moving to the downside. And when there's those 1 minute candles moving to the downside, what you should be seeing on the lower time frames, it's just not visible on all time frames, is a beautiful 1 minute order block just there like that. And then, of course, once you've had that shift coming from a valid point of interest by way of that 15-minute order block, you've then had the shift on the lower time frames low, lower high, and then you're in the game looking for price to fill Asia initially. And then what I did, I moved price to break even when we had this move in the market, and actually I took 50% off of my position because technically I should have closed that position out. However, what I saw is that there is every reason why price may want to gravitate towards that 4-hour 50 MA, while ordinarily if I'm looking at taking a higher time frame directional position, then I'd be looking to move that position towards taking profit once price heads towards that 4-hour 50 MA. What you'll see is I had very valid risk to reward ratio at that time, and I simply just let price go as far comfortably as I felt to do so. So when I'm seeing this bearish engulfing candle being printed in the market, as I always say, it's not for me to anticipate at this stage that it's going for a 1 to 7, 1 to 8. Usually this will be an Asia range position. More often than not, I'm looking to take a 1 to 3 risk to reward ratio. So as I'm seeing price starting to push towards 1 to 3 and past, it's very easy for me to close that position out. And 1 to 3.5 was a very good return for me as price then looked to gravitate towards that 4-hour 50 MA. So that's what we've got thus far. That was yesterday based on Asia range technical type of position. And then today, a lovely higher time frame directional positional trade. You'll see price came into that higher time frame daily order block. We've got beautiful range back down towards the daily 50 EMA. Yesterday's daily candle, of course, you can see closed above that daily 50 EMA. So my anticipation is, of course, now once we've started to break above it, we're going to start moving towards the upside. And once you're seeing higher highs highs in the market being created, I'm anticipating price to want to make that higher low before potentially the higher high. So I'm always double checking my own analysis to understand, well, if you're wrong, Charles, where could price be looking to go? Price could well look to gravitate towards that daily 50 MA, reject it, and push back towards those highs. With that said, there is the daily order block there, so I will not be looking for long positions once I'm in that daily order block, because that is a key fundamental of my strategy, that when I'm in higher time frame points of interest by way of weekly and daily order blocks, then of course I have to trade in the direction that I believe that order block is going to push price. In this instance, I have an order block to the highs where my anticipation is that price is going to push towards the downside, so therefore predominantly I'm looking for short positions. Once I then refine that daily order block down, you see we're just here, 4-hour order block. So again, another valid point of interest. And the question that I'm asked, well, why, Charles? Well, for a refine within that daily order block, we're looking to make the order block from the higher time frames as smaller and smaller and smaller as we possibly can in order to fit our risk to reward ratio. So 4-hour is definitely a good basis to start, and that's where I start to take up or start to have a good look at price action and structure. And what is evident to say, we've had a low in the market just here, price came back up into, let's call it this area, had a failed lower low, price then came into this area and definitely without any shadow of a doubt broke structure points to the left. So of course when price wants to gravitate back up towards that area, it's my anticipation to expect a reaction from there. That reaction then it must be refined lower, because my stop loss ordinarily on GU should not really be over 15 pips, and as you can see here, I've utilized a full amount of 15 pips because my entry was slightly lower than I'd like it to have been as well. So I utilized the 15 pips, and as you can see, that trade is running quite nicely in profit at the moment, and I have taken some of the position off because Asia has now been filled. And as a criteria, it's something that I recognize that I trade Asia ranges. So once Asia range has been filled, I am of course expecting a rejection towards the opposite direction, i.e. now once Asia, these lows have been filled, I'm expecting price to gravitate back up towards those highs, potentially make what could now be a lower high for that lower low continuation. However, if I'm wrong, I want to reward myself by understanding that I have done the majority of what I need to do in order to be successful in this trade. I've managed it successfully. I've got a good stop loss that is now sat perfectly at break even, and potentially that trade has reached its potential. Therefore, I should reward myself for my technical ability, and that's what I've done. So that's what we have at the moment on GU. I'm tempted to stop the video there. I'm reluctant to make it very, very, very long, but that's what I have at the moment on GU. I just take a quick flutter through the other pairs. Yesterday, a nice position was taken on Euro US dollar. I'll just say nice. It was good, not great. As you can see, higher time frame, it made good sense. However, being honest, I probably should have waited for this lower time frame order block to be created. But again, using the DXY and understanding, well, is a DXY in a position to turn around is one element, first and foremost. And then when I'm seeing this in the market, of course, we've had a low created. And then this could have well been the lower high, confirmed by way of the fact we now have the lower lows. This is certainly a structure point in the market. But what I am seeing on the way up is that we broke structure and the importance being is we broke Asia. So this strategy is a snap and retest type of strategy that I execute on my trades as well, which will allow me to trade in the opposite direction. So when I'm seeing Asia broken in the opposite direction of where structure is telling me, because clearly higher time frames, we are looking bearish, but we have had a break of structure towards the upside, breaking this to the left. Then, of course, when the price comes back down towards these areas, I would then expect that higher high to be created, and that's what we've got. And then the question is, well, why would the higher high be created? And the answer for me is because I believe there is a better selling opportunity on the chart where I'd be looking to take a position short from, which isn't around these areas. Therefore, if I'm to wait for that opportunity to short from, if it makes sense, I'd be quite happy to take a reversal trade, which this very much so is, waiting for that higher time frame directional short position to be materialized and come out of the market. So that was Euro US dollar, and another position taken was AUD US dollar, which isn't doing much at all. Higher time frame directional bias. I'll just go through it on the 4-hour time frame. Beautifully, we can see price is starting to step up, making those higher highs and higher lows. And on the way up, it is, of course, beautifully leaving us with 4-hour order blocks to start painting a picture with. Why I also like this is, of course, if we take a look to the left on the daily time frame, which is the bottom right hand chart, we can see beautifully that we're trading out of a higher time frame weekly order block, as well as that refined, we're trading out of a daily order block as well. And then as you can see, I'm looking for price to turn around, and we've had a beautifully, I'd say, price came into that 50-minute order block. It did break it, so fair enough. This order block was then not used as a criteria to take that position. However, if you look to the left, the order block is very much so similarly in the same place where price came back in. Price then broke structures here to the left-hand side and then came back in. I'll come back in. So I've got 10 seconds to wrap this up. So thank you very much for your patience, your time, and support of FRGNT daily chart analysis. All the very best. You'll hear from me again soon. Take care. Charles.